Following the trend is by far the most popular way to profit when trading using any strategy. But does that mean that it's the only way to trade? Of course not. Just like everything that has a beginning has an end, a trend in the market also has a beginning as well as an end. And at the point where the trend comes to an end, the market usually presents an opportunity to make massive profits during the reversal of that trend. Yeah, that's right. Trend reversals are also one of the ways to make profits in the market. By identifying or predicting the exact point of a trend reversal, we're able to take advantage of new trends before they even begin. But there is one major problem. Identifying the exact point of a trend reversal is always easier said than done. The solution to this problem is a trend reversal strategy, like this one that I'm going to showcase in this video. When implemented correctly, it can help you make massive gains by capitalizing on trend reversal moves like this one, or this one, and even this one. Let's get into it. Now let's add the core indicator of this strategy. On the indicator search tab, search for the fair value bands. This one by Quantify Tools. Now, fair value bands work by showing dynamic points in price where the behavior is considered normal or not normal. This means it indicates when the price is trading at or around the mean, this middle line right here, which is considered the fair value. It also indicates when the price is deviating from the mean, indicating that the price is outside of what's considered fair value. This basically means the further away the price gets from this middle line, the higher the probability of it coming back to it or the trend reversing entirely. This is the basis of our trend reversal strategy. Now, looking at the settings of this indicator, we can see that there are a ton of customizations. But the first one that we're gonna change is the data source. We're gonna be using the close price of a simple moving average. There are also other options including the VWAP, median, etc. And then to make the bands more sensitive to price, we're gonna reduce the length of the SMA to 5. Then on the Style tab, we're gonna uncheck everything except for these two options right here, the Extreme Fair Value Deviation Band Upfill and the Extreme Fair Value Deviation Band Downfill. After that, click here and increase this color's opacity to 50%, and then click OK. In a bullish trend, every time the price approaches or touches this upper band, this indicates an overbought market condition. This is the place where the majority of traders usually enter their short positions with the goal of making money as the price comes back down to the center or beyond. This strategy may work perfectly in a ranging market where the price is moving back and forth every single time. In a strong trending market like this one, the strategy isn't feasible for obvious reasons. Because here, every time the price enters this upper band, it may do a little pullback but eventually ends up continuing in the direction of the overall trend. As you can see here, taking trades this way would result in a lot of losses. To avoid this, we're gonna add another tool called Reversal Indicator, this one by Strategical Charts. Now, this tool uses the famous Bollinger Bands indicator to identify areas in the market where the price touched the upper or lower bands of the Bollinger Bands indicator. It then labels the price candles with the letter R to indicate potential points of trend reversals. When the letter R is colored sky blue, that indicates a bullish reversal candle, and when it's colored yellow, that indicates a bearish reversal candle. These checkmarks serve as confirmations that the trend reversal has begun with the next candle following the signal candle. Now, to make our strategy so much better, we're only going to be taking trades where there is a checkmark after the R label. Now, this indicator also changes the bar colors. However, we don't need it to do that, so let's just access the settings and disable that option. Now, the last indicator that we need to complete this strategy is the volume indicator. This one under Technicals. Then we're gonna change some settings. But before that, if you're looking for a forex broker with some of the lowest commissions and spreads in the market, then check out hankotrade. I personally use them on a daily basis. As you can see here, this is my trading history. I mainly scalp gold. And up here, you can see that it's actually a live account. If you're like me and you love having a high leverage on your trading account, then you're in luck because hankotrade offers a maximum leverage of 1 to 500. And if that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so you'll have $1,000 to trade with. To access the bonus as well as all the other perks, sign up to hankotrade using the link in the video description. Back to the video. Double-click on the volume indicator to access the settings, and on the Style tab, activate the Volume MA option, then change its color to white. Every time these volume bars are above this white moving average, that indicates the presence of enough volume in the market, so we will be looking to take trades. But when the volume bars are below this moving average, that would mean that there isn't enough volume in the market, and so we will not take any trades. Now, to trade using this strategy, here is how we're going to do it. For a long trade, first, the price must pull back into or touch the lower channel of the fair value bands indicator. This indicates the beginning of an end of this short-term bearish trend. Second, the reversal indicator should print a blue R label followed by a check mark. This indicates a trend reversal or the end of this bearish trend and the beginning of a new bullish trend. This becomes our entry signal candle. Last but not least, we want to confirm that this entry candle has enough bullish volume to push the price all the way to take profit. For that, just make sure that this last bar of the volume indicator is colored green, and it should also be above this white moving average. All our entry conditions are met on this candle, so we're gonna enter a long trade. The stop loss is gonna be set below the most recent swing low, and for the take profit, we're gonna set it at 2 times the risk. We let the trade run and take profit. Now, to take a short trade, first, the price must pull back into or touch the upper channel of the fair value bands indicator. This indicates the beginning of an end of this short-term bullish trend. Second, the reversal indicator should print a yellow R label followed by a check mark. This indicates a trend reversal, the end of this bullish trend, and the beginning of a new bearish trend. This becomes our entry signal candle. Last but not least, we want to confirm that this entry candle has enough bullish volume to push the price all the way to take profit. For that, you just make sure that this last bar of the volume indicator is colored red, and it should also be above this white moving average. All our entry conditions are met on this candle, so we're going to enter a short trade. The stop loss is going to be set above the most recent swing high. And for the take profit, we're going to set it at 2 times the risk. We let the trade run and take profit. There you go. A simple strategy that you can use to take advantage of trend reversals. If you're interested in this strategy, remember to do extensive backtesting and forward testing to see how it would perform over longer periods of time. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.